What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 33. It's July the 26th, 2023. We made some trades today, so let's go ahead and get into it. First and foremost, let's talk about the levels that we have on the chart today and why they're important. So we have yesterday's closing price located at 35,605, and that's going to play a very important role throughout the entire session today. So we'll get into that a little bit later. Next up, we have our lowermost zone that's located from 530 up to around 540. Drew this zone in the pre-market based off of a level of consolidation that I saw. And then we have our last zone right here, which I drew up pretty much just based on this price action right after it opened. So let's start it off right there when the market opened. So we see that we had a huge spike to the upside. So we already know from the jump that more than likely this will probably be another bullish day, just like we've been seeing over these past 2 weeks. So once we had that spike to the upside, I drew my zone once we established a swing high and a swing low, because more than likely, usually that area will get retested and will be very important throughout the day. So we'll get into that a little bit later also. So let's talk about my first trade for today. So trade number one, I went short here after seeing a double top and a lower high get formed. My exit could have been a little bit better. And I say that because I did everything right in terms of entry and trade management. I shorted at the top of a consolidation zone after I saw a double top and a lower high. So I'm trading in line with the trend, expecting for prices to move lower. I'm good on that part. But my entry was just, my exit was a little bit off because I was trying to hold out and wait for prices to get all the way back down to the bottom of the zone. But if you notice, they only came back to test the candle that touched the zone the last time, but they tested the body for that candle and they did not come back to test the wick. So I think at this point right here, I was maybe 3 points away from my profit target, and in scenarios like that, I just think it's better to just go ahead and take the profit. You know, you don't have to hold out for those last 2 or 3 points. You can take what's there. And I think that's a big lesson that I talked about yesterday too. So that's something I'm still working on, because I kind of have a conflict. I'm trying to decide whether or not I should close my trades out early, or if I should just say, well, it's only 3 points away. If the trade has worked up until this point, you might as well just let it keep working. But you know, I'm always bouncing back and forth between those two ideas, and I'm still working on learning and trying to figure out which one of those ideas is the best for each scenario that I run across. So that's one of the things I'm working on right there from trade number one. So next up, we have trades 2 and trades 3. Now I went long right here expecting for the zone to hold up, but what I need to do is always respect the lower highs. And here's the reason I say that. Let's go ahead and zoom in and get into it. So when it comes to a zone, I usually believe that the zone is going to stay within the zone until there's a sharp breakout and you see the signs that precede a breakout. So usually if the breakout is going to come to the downside, if the breakout is going to come from the downside of the zone, usually you'll see a lower high get formed somewhere within that zone, and then that'll eventually lead prices to break out to the downside. And it's the opposite on the flip side. So let's say if you were expecting to break out to the upside of the zone, up and out of it, you would expect to see a higher low get formed somewhere within the zone, so you can have enough momentum to push prices outward. So I actually think that's a concept we talked about last week also, where I took a similar trade like this and also got stopped out. Let me see. Let me run through it real quick. Hold on. Because I swear I remember that for some reason. Where is it? One of these. Man. Okay, I can't find a specific day, but we won't take too long trying to find it. But just remember, overall, when you see a zone and you see a lower high towards the bottom level of that zone, don't necessarily put your order at the bottom thinking that the zone is just going to hold up because it's the zone. You always want to respect those lower highs. So that was my biggest mistake on trade number 2. But then I came back on trade number 3 and I did the right thing that I was supposed to. So I went long at the bottom of the zone on trade 3, and I saw prices move my way, but eventually they came back to stop me out at break even. So that's another thing that I want to talk about too. You need to take your trades from the best levels, because sometimes in a situation like this, if you take your trade from the wrong level, like I did on trade 2, you'll get stopped out on that. But then when prices come back to the right level, because that fits your trading plan, you still have to take that trade too, because that's just part of your job. So you take the trade from the better level, and sometimes that one might not work either. But that's a loss that you can take when you take your best setup that follows your plan and follows the price action. Sometimes it just doesn't work, and that's a loss that's acceptable. But in scenarios like this, if you trade from the wrong price levels, you'll have to take both of those losses. Now, luckily trade 3 was only a break even, but there have been scenarios where I've had to take losses on trades 2 and trades 3, and that's actually something we'll see on trades 7 and 8 when we get into it a little bit later. So always remember, you want to take your trades from the best levels, because if you don't, you'll probably just be trying to chase the market and play catch up, and that usually doesn't lead to success too often. So always remember that. And with that being said, that brings us to trade number 4. So notice how after we made the lower high, prices continued to the downside, and then from that point, once I recognized that we were making lower highs, I drew the bear trend line, drew it from the swing high that we created right at the top of the zone, then connected that to the lower high that we just made and extended that throughout the market, and that led me to trade number 4. So let's go ahead and read the note. So I shorted in the downtrend as prices came back to retest the zone and the trend line. And that right there is one of my favorite bread and butter setups. It usually works most of the time, because once you see that lower high get established, you usually see prices come back up to retest either the bottom level that used to be a previous low. It'll come back and test that level, or it'll come back and test a major breakout level that it just broke out from. Now in this scenario, we had both of those things occur. So we came back up to retest what used to be a previous low, and that also lined up with the bottom of the zone as well as the trend line. So we had 3 different factors that led us to making trade 4 right there. So my entry was good, and I did make profit on this trade, but the only thing that I would say is that I was definitely a little bit too anxious when it came to my exit, because I was still in the mindset that I was from yesterday, where I made a lot of good trades but didn't lock in profits. So I was like, you know what, today I'm coming in, and as soon as I see the market start to act shaky in any way, shape, or form, I'm taking my profits right then and there. I'm not holding on for more and hoping that I can get better. Nope, I'm taking it right then and there. But on trade 4, I think it's a very fine line between closing your trade out prematurely and then closing your trade out when you feel like the market has already ran as far as it could. Now in this scenario, I was more so aiming for the price level that we had towards the bottom of the zone, because I figured that if we had a spike all the way to the upside and then we reversed off of that spike and didn't see any continuation, more than likely we're either pulling back to retest where the spike started from, or to retest the zone that we established in the pre-market. So those were the 2 levels that I was looking towards. So I said, I could definitely hold this trade back down to the bottom of the zone because it makes sense. But because of yesterday, I just wanted to go ahead and take my profits. But that's not always the best decision when everything makes sense. See, that's the thing about it. You never want to just have concrete rules that you follow all the time, no matter what. You want to have rules that you follow most of the time, but you also want to be able to figure out when you need to make exceptions for those rules, and you need to really study those scenarios so you can have a feeling of comfortability when it's time for you to really make that decision. Because the last thing you want to do is be anxious when you have to trade in real time with real money on the line. So always remember that it's a fine line between exiting prematurely and then exiting on time. So keep that in mind. Now that brings us to, well, before we get to it, let's just go ahead and talk about the price action. So after we bounced off of the zone, we created our lower high right here at the ellipse. We pushed higher. We continued to make higher lows, which eventually led us back into the zone where we established a higher low once more, pushed up, and then as we came back into the bottom of the zone one more time, that's where I went long. So I basically went long expecting for this higher low right here to act as a level of support, because notice how this wick doesn't necessarily come back down to the bottom of the zone, but it's close enough where you can use that as a reference point. So I was looking to go long off of that entire sequence right there as prices came back into it. So let's go ahead and read the notes. So I went long at the bottom of the zone. I took the trade again when prices spiked back through my entry price. And that's just one of my systems that I use when I am in the market, because sometimes you could take the right trade but just be a little bit too early, and you'll see prices come back down to hit your stop, and then immediately reverse back. I've seen that so many times where once it reverses back, if it passes past, if it passes past, if it passes through the original entry price that you took from that trade before, you just got to get into that trade and ride the momentum back to the upside. So that's exactly what happened for me at trades 5 and 6. On trades 5, I initially went long right there at the bottom of the zone, got stopped out, but as prices spiked back through, I took the same trade again, took it right back up to yesterday's closing price, which also kind of lined up with the top of the zone. So on that one, my entry was good, my exit was great, solid trade right there. So after we touched the top of the zone, then we kind of, I guess you could say, we created a minor higher low, which is what I thought at the time, because if we read the price action from the bottom of the zone, let's start right here from trade 5. So we moved up, pulled back from here, and continued to move higher. So we can consider this point right here a higher low, right? So once we move up, came back down into the zone, and from that point forward, we moved up. So I considered this area right here, these two candles, the green one and the red, 1 and 2, I considered this to be a lower high, which is the reason why I went long at 7. Now, I tried to go long based on a higher low, but what I need to do is always respect the zone. And that's the thing, I usually respect the zone like 99% of the time. But there was a scenario last week where we were in an uptrend that kind of looked similar to this one, where we had a spike, we pulled back, and then we're pushing up to test the highs of that spike once more. The last time I saw this formation, it formed a higher low in like the middle of the zone, came back to retest that higher low, and then prices moved higher. Now on that specific day, I did not take that long trade because I usually don't trade from the middle of the zone at all. But once I saw that work that one day, I was like, if I see that again in a similar market scenario, I'll think about taking that long trade. So that was pretty much my mindset at trade 7. But I think here's the couple of things I went wrong with when it comes to that type of mindset. One, like I said before, never want to trade the zone from anywhere within the middle at all. You really don't. Second, we could really have a debate about whether or not this was a higher low, because I'm reading the price action. I see that this is a pivot point, but you would have to really break down the candle to see that. So you have to ask yourself, you got to remember, it's a 1 minute chart. So ask yourself, how many other people do you think really recognize that higher low? You know, sometimes being too smart can work against you, because you might be so smart that you can find something in the market that nobody else sees, which is cool. You know, it gives you something to talk about when you make a trade review. But if nobody else in the market is seeing that, you can't really expect any other participants to go long with you and help push prices higher when you go long at a price level like I did at trade number 7. So always remember to respect the zone. And even if you do have a higher low that gets formed in the middle of the zone, you don't have to take it. You know, it's always going to be trades that come after whatever setup you're looking at. And if you feel uneasy about it, just let it pass. Let somebody else take that trade, and then you wait for the next best opportunity that comes your way. So that's what I need to remember when it comes to trying to trade a higher low within the middle of the zone. It's not something that I really want to do. So then on trade 8, this is what I was talking about from earlier when I was discussing trades number 2 and 3, where if you go long from the wrong levels, eventually when you have to go long from the right levels, you might have to take the loss on that one too. And that's exactly what happened at trade 8. So on trade 8, I basically was saying, well, if I went long too high, if I go long at lower prices, everything should work out, right? But see, that comes back to something I talked about last week also, which is don't go and enter a position as soon as prices come back to that level. You want to see prices come to that level, and then you want to see how they react around that level. And then if you get the reaction that you're looking for, yes, you can go ahead and enter into the trade that you were looking for. But you don't want to just anticipate what's going to happen. You want to let the market show you what it wants to do, and then you just ride the wave. So I had to take the loss on 8 because of that. So after trade number 8, we broke out of the zone, came back, retested it. We had a successful breakout that pushed us all the way back to retest the higher low that we established not too long after we came out from the bottom of the zone that we established a little bit earlier in today's session. So once we established that pivot point, we sold out, well, excuse me, we rallied hard to the upside, came back into the zone, created a higher low right on top of the zone. And after I saw that, that's where I went long. So let's read that note right there. So I went long here as prices came back into the zone after creating a higher low. Only thing was my break even stop got hit. And sometimes when you operate in the market, that's just something you'll have to deal with. Now, on this trade, that was something I had to accept. But the only thing I would say is that my entry could have definitely been a little bit better. Because usually I like to go long based on the support level of a higher low. So if I consider this to be the higher low right here, when I went long at the blue triangle, I was definitely going long way too high. You know, what I really like to do is draw a circle around my pivot point, extend a level of support across, and then look to go long as prices come back to retest that support level. So if we had that support level drawn across these wicks, we would have eventually had a retest on this candle right here as prices came back, and I would have been able to catch it, take it right back up to the top of the zone like I initially tried to do at trade 9. So that's why I always say your entry is so important, because you could be right about the trend direction and you could get in at good prices but still get stopped out, or have your break even stop get hit because your entry just wasn't as perfect as it could have been. So always remember that, you guys. The small details always play a big difference when it comes to the market. So after trade 9, we see that prices came back up to the top of the zone. We had another higher low get created, and from that we moved higher to create a new swing high for the day. So after we broke out of the zone, we pulled back into it, and I start trying to use my breakout strategy right here. The only thing was, on trade 10, I was just a little bit too early. Now on trade 10, if I would have just held it, my stop wouldn't have been hit. But I still think that I made the right decision by getting out, because what I like to do is I like to see prices come back into the zone, see the reaction, and then once prices start to move away, then I'll get into that trade. So that's exactly what I did on number 11, trade number 11. So after I cut trade 10, I said, okay, prices are moving away after they just bounced off of the zone during the uptrend. So that right there is everything that I need. I went long right here, but unfortunately got stopped out for break even once again. Now what I've been kind of realizing these past few days is that when you have, I get this feeling in the market, and I don't know where it comes from. Maybe it might just be all of the hours that I've been putting in and studying, but it's something in my stomach that says, okay, this trade is run as far as it's probably gonna run. You should take profit right here. I know it didn't hit your profit target, but you don't really have to hold it. This is probably a good spot to get out. And I have that feeling a lot of times in the market, but usually I just ignore it and I say, look, if your profit target is up there, just hold it where it is. Be patient and let the market do what it does. It's gonna come there and hit you. Just wait for it. But you know, I think that also depends on the type of market scenario that you're trading in. When the markets are moving a little bit slower, it's not guaranteed that prices are gonna come back and hit your target. Now, when the market is really volatile and is moving all over the place, yeah, you can hold that trade, because more than likely it's coming back to hit your level. What you just got to really understand what type of day you're trading in and adapt your profit taking strategy to fit the type of day that you find yourself trading. So that was my biggest lesson that I learned over these past couple of days, and a lesson that I'm still trying to, you know, get the best of and figure out how to get through. So still got to practice a little bit on that, but it's nothing I can't handle. So after this trade at 11 came back to break even, we established a lower high right here when we were unable to find more follow through, bouncing up and away from the zone. So once I saw another lower high get created at 0.12, as well as seeing prices come back to retest the top of the zone once again, that's where I shorted. So let's go up to those notes. Number 12, I shorted here after seeing multiple lower highs and seeing prices come back to retest the top of the zone. So everything about my entry was completely perfect right here. But once again, just like all of the trades that I've been having this week, I had great profit, but I just didn't lock it in once again. Now on this one, I feel like I could have definitely locked it in once prices came back to retest this higher low. But I just believe that once we got back into the zone and we got below yesterday's closing price, we were definitely moving down to retest the bottom of the zone. But that just wasn't the case. And that's another example of trading what you see in the market and not what you think. You don't want to what's it called? You don't want to project your views onto the market. You want to trade what you see, not what you think. The market is going to do what it does and you have no control over it. So you just got to follow it wherever it goes. If the market says, hey, I don't want to give you 21 points this time, but I will give you 15 if you want it, you can say, you know what, market, I'm good. I'm going to hold out and see if you really playing and see if you're just going to give me the 21 anyway. Or you could say, you know what, market, since that's what you're offering me, I'll take the 15. No problem. That's the mindset that I should have. I should learn how to take the 15, take the 14, take the 10 sometimes, you know. I don't always have to get that 20-point scalp target that I'm looking for. So it's one of the biggest things I've been learning this week. And I mean, hey, that's a strong lesson to learn, because if I can get that lesson right, I can make good trades and I can make good profits a lot more consistently. So definitely something that I got to work on. But after trade 12, we see prices spike back up, break above the zone, come back, retest yesterday's closing price, create a higher low. Now from that point forward, if you wanted to, you could have drew a bull trend line from that swing low that we initially had, connect that to the higher low that we just made, and then extend that through the market, and it would give you a couple of good entry points where you could have caught this move as well as this move. Now I caught trade number 13 after I saw a double bottom get formed followed by a higher low, which is my textbook setup. So if you guys remember from last week, I told you guys how whenever you see a double bottom followed by a higher low, it doesn't always mean that prices are going up, but it does mean that there's a very, very high probability that prices should continue to the upside for a considerable amount of time. So once I saw that higher low get formed after the double bottom, I waited for prices to come back, retest the level of support that the higher low created, and then I went long on trade number 13. So yep, went long here as prices came back to retest the support level of a higher low, target reached. And then my last trade of the day happened after this little down move started. So after we moved on from trade 13, we eventually established the high for the day at 35,660. Now after that, we created a lower high followed by another lower high. So you know, with that being said, all you have to do is take your swing high, connect it to your first lower high, and then extend that throughout the market. And I use that level, that bear trend line, to eventually enter short on 14. So if you look at trade number 14, you'll actually notice that I use the exact same methods that I did on trade number 4. I waited for a set of lower highs to be created. Then I waited for a major level of support to be broken, waited for prices to come back and retest that level of support as well as the trend line. And that's exactly what I did on 14. Once prices broke through the support level of that higher low, I waited for them to come back and retest what used to be a previous low right here, which should now act at, which because it used to be support, now it should act as resistance. And that's exactly what we were able to see at trade 14. Now on trade 14, I think I made my best trade of the day right here, because I entered with a perfect entry, and then I took my trade all the way back down to my profit target, and I got out when it made sense. Now you're probably thinking, Ty, you could have held that trade all the way back down to yesterday's closing price, and it was probably, I think I closed this trade at 610, so I was maybe 6 points on the table that I left up there. But if you look across, this level that I got out at actually lines up with what used to be a previous higher low. So I was saying to myself, look, based on all of the trades that I've taken this week, I've learned definitely that I need to get out at the level that makes the most sense. Not the level that I want prices to go to, but the level that makes the most sense. So on trade 14, I feel like I made the right decision by getting out right there. Now, it's always more room to run, especially when that closing price from yesterday is coming in. But you always want to make sure that you come into the market and trade your trading program. If you came in to get 25 points, get your 25. The market might offer more, the market might offer less. Now we know that if it offers less, sometimes you got to take it. But in scenarios like these, when you feel like you've made a good enough profit, lock that in. So I ended the day on a good note, and I think that's a good thing, because I can ride that momentum into tonight's practice session and hopefully into tomorrow's session, because you know the day after the FOMC statement is very, very volatile. So if it's anything that's guaranteed tomorrow, it's definitely guaranteed that it's going to be some volatility and some good movement. So I just want to make sure that I'm ready for all of that, and in order to get ready for that, I need to make sure that not only do I take good trades and good entries, but I gotta lock those profits in, because I believe that if I would have been able to lock profits in on trade 1, maybe I wouldn't have took that long trade at trade 2. Maybe I probably would have just took that long trade at trade 3, so that would have saved me a loss. And then if I had profits already stacked up, I probably would have been more confident in being able to hold that trade at trade 4, because I'll be like, you know what, I'm already in profit for the day, so if this trade comes back to break even, it's all good anyway. But if it doesn't and it can run all the way back to the zone, if I thought I had profits before, I'm definitely gonna have profits now. So I think taking profits on my trade builds confidence, which allows you to make better decisions as the market goes along. So, you know, I did what I did today, and I can't go back and change any of that, but I can go back and think about how things could have potentially been different if I would have made better decisions. And going forward in the future, that's something I got to work on too. Like, hey, in the market, when it comes to making trading decisions, if you make the best possible decision that you can now, it's going to help you right then and there, but it's also going to help you down the line when you have to make more trades 30 minutes later, 40 minutes later, or an hour later even. You know, so always try and strive to make the best possible decisions that you can. And that's really the biggest lesson that I learned today, and that I want to pass on to you guys. So I appreciate you guys for tuning in with me. It's been a good day so far. I hope you guys learned a lot, because I definitely did. I'll be back tomorrow on Thursday, July 27th, ready to run it back and make these trades right and get everything in line like it should be, because I really believe I can, and I believe in this trading plan. So I'm gonna go ahead and get this work in, go study a little bit, and I'll see you guys tomorrow. But until then, take it easy.